Hi everyone, you're tuned into Buy Now Sell Now Weekend right here on ET Now. I'm Wwatch.
And great to have you with us. I'm Megha Chadha, and of course this is the show where we strive to get all your stock related questions answered. Let's bring on board then our two experts who are joining in now. We've got Jagannathan Tunugantla, who's the equity head at SMC Capital. He joins in to talk about the fundamentals, and for technical questions really, we've got Shrikant Chauhan, Senior Vice President for Technical Research at Kotak Securities right here with us. Welcome gentlemen, thanks very much for taking out the time. Let's focus in then on the first question for the day. It's a question that's been sent in to us from Goenka, a businessman in Kolkata.
My query is on an Adani Port. I bought 2,000 shares at an average of 147 for 3 to 6 month time view. Please recommend or advise your views.
Okay, what should he do with that holding that he's got a pretty hefty quantity of? He's sitting on a neat sum of 22,000 rupees almost. Jagannathan, let's dissect the fundamentals of an Adani Ports, because things have been going fairly well for it in terms of brokerages. Also, they've been turning fairly positive, saying that the kind of run-up that we've seen is likely to continue. Would you A, advise him to hold on, and B, do you think he should stretch his time horizon?
No, there is no point in overstaying his welcome. I think Adani Group is going through a rough weather in terms of debt profiling. Of course, having said that, in the recent past there is a sharp bounce in the stock prices, but that should not be taken too seriously. As you would appreciate, all these stocks tend to be very volatile and can swing downwards any moment. So I think, I don't think, considering that he has a good chunk of money in this one, I don't suggest him to overstay his welcome. Maybe he can think about Sesa Sterlite appearing to be a lot better company after the merger of Sterlite, and Kane India is going through buyback, which will be positive for Sterlite. All in all, at the current prices, I think that is appearing to be more credible bet than Adani.
Okay, so Gaurav, Jagannathan, of course, is not too confident about prospects of an Adani, so instead suggests that you look at a Sesa, and it's a lot of Adani Group stocks, of course, which have seen a bit of a turnaround in the last month or 3 odd months. So just from a technical point of view, Shrikant, what would you be advising Gaurav?
Exactly, Meghna. See, this particular stock is one of the most outperforming stock in the overall Adani Group. And if we check this particular stock since last, say, several months of time, the stock is in the range of 130, 135 on the downside and 160, 155 on the high side, and this time the stock is trading near to its upper range of the boundary, as well as the overall market is also showing a lot of momentum, especially for the core economy related stocks. So technically the picture is a little bit different. It is showing that it is heading for 175, 180 kind of levels. So my advice is that the Gaurav can certainly hold on to this particular stock at least up to 180, 175 levels, and there he can take profits. In case if because of any reason the stock falls below 140 levels, then he can exit out of it. But I think the way his investments are there in the stock, which is very huge, in my opinion, he can hold on to it.
Okay, Gaurav, so you have to take the call now. According to Shrikant, you can look to stay invested in this counter. Targets are 175, but if it falls below 140, look to exit. You had Jagannathan who said, don't overstay your welcome. Sesa Sterlite is a preferred bet. Okay, moving on then to the next query that's also been sent in by Gaurav Goenka, and this time it's on an Adani Group stock. It's Adani Power.
I've bought 2,000 shares of Adani Power at an average of 35 rupees for 3 to 6 month of time horizon. Please recommend.
Okay, so our second question as well is coming in on an Adani Group name, and this one's from the power pack really. Of course, given the pain that the entire power industry has been going through, the pains there when it comes to procuring raw materials, or you have fuel supply constraints kicking in, you have gas supply that's not coming in as well, and on the other hand you have tariff issues that a lot of these companies are grappling with. Jagannathan, what would your advice be on an Adani Power there?
Again, better to sell it off. I think again, as I was telling, that generally the nature of the stocks of this group appearing to be good as long as the party goes on, but any moment the party will stop. So to that extent, I think too risky a bit. Probably I think PSU, mid-cap PSU banks appearing to be very are in the middle of strong momentum. Probably he can think about PNB. I think it's all set to move at least towards 580 to 600 rupees at least.
Okay, so once again, it's an exit call when it comes to an Adani Power. PNB, Gaurav, that's a stock that you can look at with an upside target of 580. But let's chat about the technicals then. And Shrikant, while the fundamentals, as Megha flagged off, may remain a little bit dodgy, no doubt most of these power stocks, Adani Power included, have seen a pretty special rally so far. What are the technicals suggesting? Would you also concur with Jagannathan?
I think the stock is in the range, and while looking at the overall trend of the market, I'm of the view that it is again heading for its next upward target of 37.38, where it has very strong resistance. But I'm of the view that it is heading towards that level, and in case if there is no as such any hurry for the client, then he can certainly wait for some time, and he can sell in case if it comes around 37.38 levels. But yes, the call is same. It is better if we exit out of this particular investment and he can look for any other investments.
Okay, so Shrikant's talking of targets of closer to 38, and Jagannathan, of course, recommended that you switch over to PNB instead. Well, let's move on and take on board the last and final question for the day, which has been sent in by Suvajit, who's an IT professional from Bangalore.
I'm holding 10,000 shares of Jindal Stainless at 37.40. So just want to know, should I hold them, sell, or accumulate more?
Okay, let's help out Suvajit with his question in the metals pack. He is sitting on a steady amount of close to 1,000 rupees. But Jagannathan, for someone who wants to build up on that capital that he's already sitting on, do you think that Jindal Stainless is the right stock to be in, given that we have seen a run-up in some of the other metal peers like a Tata Steel, a SAIL, despite the fundamental concerns and despite the fact that you do have most of the metal prices which are topping out? What's your view?
Yeah, I think, as you rightly said, that Tata Steel has seen a phenomenal rally all the way from 190 to 400 rupees. Dream rally, one can say. I think one of the best wealth creator in the last 6 months or so. I think you can't put Jindal Stainless in this league in terms of either capacity or in terms of its class. But nevertheless, I think a decent momentum can be expected. I think somehow, if you see the nature of the caller, it's appearing that he has a tendency more towards, I think, typical these mid-cap kind of stocks. I think always he has to remember that sometimes the big wealth creation happens in the frontline stocks. I think he can choose whichever sector he wants, but prefer the frontline companies. I think rewards can be much more realistic.
Okay, that's the advice coming in for you, Suvajit, on Jindal Stainless. But the stock, of course, has been through an awful lot. This week, though, it's been up close to 3% odd. What would you advise, Shrikant? Because he's just about holding on to his capital at this point. Should he switch out and move to another metal name, probably look at another sector altogether?
Megha, I think Sujit should have to switch on these particular investments, because technically I'm not convinced with the overall pattern of Jindal Stainless. The stock has not at all participated in last 2 months of rally of the metals, as well as if we go through with the overall pattern of this market, then there is a lot of scopes for frontline stocks, and it is better if we enter into any stock which is available at its support and from the metal space. So in that context, my view is that he can certainly look for Sesa Sterlite, which is trading at 175, 180 kind of levels. And from here, there is a decent upside that I'm expecting on charts. I'm expecting 200, 225 next few weeks of time. And at these levels also, the stock is very attractive. So certainly he can exit even at current levels, and he can switch on to Sesa Sterlite.
Let's take it straight to the Portfolio Advisor segment. And well, today we'll be discussing Virender Kumar's portfolio on the show. He's 61 years of age. Mr. Kumar's a retiree. He's got 9 stocks all in all, and he's got a time horizon of the next 3 years. Well, let's get a handle as to the stocks that he owns. There's close to 92 shares of Allahabad Bank, 200 shares of Allahabad Bank fetched at a level of 92 rupees apiece. 276 is where he's bought Aurobindo Pharma. Ken India, he's got close to 200 shares at a price point of 315. From defensives, there's Dabur India, close to 300 shares fetched at a price of 169. Diwan Housing Finance also features on the list, 200 shares at 121. Engineers India, 239 is where he is bought that stock. Moving on, then there's GIC Housing Finance, just a quantity of 100 shares at 116 rupees. There's HUL, of course, 100 shares at 582. India Bull Spa is also on the list. 22.7 is where he's fetched close to 500 shares. Jagannathan, you've had a look at the portfolio. In terms of diversification, I think he's pretty spot on, but what do you make of the buy points and where do you think he'll really need to look at tweaking?
Decent portfolio, but frankly speaking, can do much better. If you clearly see, most of them are mid caps. One should appreciate that many of the say FIIs, global funds, or say many mutual funds have the frontline companies in their radar. Only after the frontline companies run up to their full course, then generally the focus shifts to mid caps. So meaning thereby, whenever the market appears to be in a strong momentum, I think naturally the frontline companies will be much better beneficiaries. While the portfolio is decent, I'm sure he will be much more better off and he will be much more happy provided if he adds a little bit more frontline companies.
Okay, front lines are probably an area that you need to nibble into, Mr. Kumar. But for now, let's focus on the stocks at hand. And Allahabad Bank, then he's got that one at a level of about 92. And Oro Pharma, one of the best performers in the month of November from the mid-cap space. And again, India, Jagannathan, what would you advise?
Again, three good companies. One thing is Allahabad Bank, while you can definitely hold on. I think many other mid-cap PSU banks are in strong momentum. I think be it, say, PNB or even SBI is appearing to be heading towards 1900, 2000 rupees at least. Maybe you can think about any of those, but even Allahabad Bank is appearing to be decent. But Arvind Pharma, I think momentum is too good. I think he can hold on probably maybe 300, 330 is very much on the cards. He can hold on. And K in India, I think for next 6 months the stock will not move for sure, thanks to the buyback program of 335 rupees, meaning thereby there is no much money for him to be making in the next 6 months or so. But having said that, after the buyback program gets completed or maybe close to the end of buyback program, there is a reasonable chance the stock should break out maybe close towards 400 rupees. If he has that kind of long term, then hold on to K in India, but don't expect anything to happen in the stock in the next 6 months.
Okay, Mr. Kumar, so it's pretty evident that the first three stocks are a hold recommendation. Let's move on then to the next set. Dabur India as well as the Diwan Housing Finance. And what do you make of the fundamentals when it comes to an Engineers India, Jagannathan?
Again, three decent picks. Again, I think considering that his tendency to get into the mid caps, I think that was again visible in all the three. While he can hold on to Dabur India, I think maybe a target of say 185 to 200 rupees is very much possible. But Diwan Housing, it will be better off if he exits, and then maybe he can think about maybe, as we were discussing earlier, also maybe Jindal Stainless appearing to be very strong bet at this moment, or he can think about say maybe HDFC or HDFC Bank. Of course, as I was mentioning, that frontline companies maybe the real action where the real action is. Engineers India, again, he can hold on, but again, trust me, it will be very patience testing stock, and he has to wait for very long period for him to make real money out of this. If he has patience, then probably he can hold on. Otherwise, Engineers India, he can again he can exit and maybe look for any of the other like PFC or REC appearing to be much better, at least momentum stocks.
Okay, so switch from a Diwan Housing to a Sesa Sterlite and Engineers India as well. You can hold on, or alternatively look at probably an REC or a PFC. Well, let's talk about the next couple of names. GIC Housing, he's got the FMCG blue-eyed boy HUL as well as an Indiabulls Power.
Yeah, I mean, GIC Housing, again, he can hold on. Again, a target of 135 is possible. HUL, I think it has its honeymoon period is over. I think for sure when the risk-on rallies will happen, it will happen in any other sector other than the HUL kind of stocks. I think there's a reasonable chance the stock may slip towards to pre-open offer levels. I think that risk is always there. So he should not again expect too much to happen out of HUL. I think again he can exit there and maybe he can think about one of these momentum stocks. And Indiabulls Power, again, I don't see a reason why one should hold a power stock, and on top of that, why Indiabulls Power, I don't believe in that case. He can sell it off. If he has again a long-term perspective, I think Reliance Industries around this 850 rupee level, appearing to be a solid bet for a target of 1,000 rupees maybe in a year or two.
And let's get talking, of course, then with our technical expert first up to get a sense of what he's seeing for the week ahead on the benchmark. It's been a very interesting month, Shrikant, where we've clocked in record highs and finally ended the month at a level of about 6180 odd, and for the week we gained close to about 3% odd. What's the view that you're forming on the benchmark for the near term?
Mega, see, like Nifty is very clearly into a corrective phase because after hitting 63.50, the market has taken 8-9 days to fall up to 5970, and from there, now the market has taken more than 8-9 days. It is almost 12-13 days, and still the market is well below the important level of 6350. So I am of the view that it is a corrective phase. The markets are heading towards maybe 6250, 6250.
That's the view coming in on the Nifty. But Shrikant, run us through what is it that you think one should adopt as a trading perspective on the charts in terms of top stock ideas?
So technically, capital goods have shown a lot of momentum as well as the volume-based activity in last 10 days of trading time. I am of the view that BHEL has given very clear breakout on daily charts. Some 20 days back, the stock has given a very strong volume-based recovery up to 152, 154 levels, and after that, consolidating for nearly 20 days. Today again the stock closed above that level. So it is a very clear-cut box pattern, and there is a bullish breakout. So from here we can minimum expect 170, 175 on the head side, and on the downside I am expecting 145 as a very important level that it will not break, but that particular level we can keep as a stop loss.
And the second idea, apart from BHEL, what looks good?
See, other than BHEL, we are especially focusing on the Sesa Sterlite, because again today in this last week the stock has given a bullish reversal on daily charts. The stock has corrected almost 40% of its entire rise, and from 175, 180 we have seen a good amount of volume consolidation. So from here the stock can easily go to the next levels of 192 or 200 in next few days of time. Buying at current levels is advisable with a final stop loss at 170 on the downside.
Okay, so it's a BHEL and Sesa Sterlite that's on Shrikant's radar. And Jagannathan, just a quick word from you on the Nifty as well. What sort of fundamental view are you forming on the index right now? Do you think it's a good sign that it's been consolidating in this range of about 6,000 to 6,200?
We are in a risk of kind of market. I think it's better to, it makes sense to move on as a F&O series to series. I think one will be a good month, one will be a off month. So one has to keep timing it that way. Just that unfortunately we are not in a trending market per se. I think one has to keep getting these bounces on and off correctly. And having said that, overall momentum is appearing to be good. Most of the central bankers across the world appearing to be cheerleaders, like in IPL. In the yesterday era, they used to be the umpires. Now these days they are the cheerleaders. As long as they keep providing the liquidity, I think the party will be on.
Yeah, right. There has been so much volatility. One can't really predict the move of the markets. But in light of that, Jagannathan, what do you think would give you comfort in terms of fundamentals when it comes to individual stocks that investors can really look to put their money in for the long term?
I think SBI is appearing to be a solid bet at this level. Of course, it has been testing the patience of the long-term investors for very long between this 1400 to 1800 level. But I feel at some stage or other, I think there should be a solid rally in State Bank of India. Maybe I think it should be crossing 2000 rupee levels. And on top of that, IDFC is one more appearing to be again around this 100 rupee level has been consolidating for almost 2-3 months. Again, testing the patience of the investors. A good bet, and on top of that. It has not participated in the last 1-2 months of rally. At one stage or other, it should be participating, and of course the possible banking license is also another trigger that can probably take the stock higher side. I think when that happens, probably 130, 140 will not be far away.